Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. If you've been with us for a while, you know that we don't just talk about earnings, we talk about how to profit from earnings. And we do this each and every week. And let's run down what we got for you going on this week. We're going to talk about stocks to watch, give you some featured stocks that we're looking at, talk about last week's trade that, as an example, last week's trade was on Foot Locker. We generated a 25% return in just 2 days. Okay, 25% return on our money in just 2 days. We'll talk about that. I'll show you the results of that. And this week we're tracking over 100 stocks. All right, as we head into the last 2 weeks of full two weeks of trading before Christmas. Christmas is right around the corner. So last full 2 full weeks that we have here. So let's get into it. Here we go. All right. So I'm going to first show you the earnings call sheet this week. So let's go ahead and take a look. We have a bunch of big names. So while the number of earnings are starting to slow down, we have several stocks. Now, because we're covering several stocks here, be sure to look at the chapter feature that we have on this video for each and every stock that we talk about, okay? And that way you can jump to maybe a stock that catches your interest. All right, so on the left-hand side of the sheet, we have our breakout stocks. On the right-hand side of the sheet, we have the stocks that we think are going to consolidate or just not move very much. That usually is stocks that move less than 10% or those that move single digits. All right, so let's go ahead and for this week of December 9th, let's get into it. Let's take a look at what a quiet stock looks at like. I have this example that I show each week. This is Yum Brands, and you can see the red vertical line is the earnings date, and the ellipse is really showing the statistical volatility. That's what the stock moved through the earnings event. And you can see here, little bitty moves, small gaps, not really much movement at all. In fact, the stock has been stuck in a channel in this snapshot between 125 and about 143 for almost the entire year. All right. So the stock just doesn't really move. That's an example of a quiet stock. So let's get in. Let's take a look at the sheet real quick. And we're going to talk about some of these beginning with Toll Brothers. All right. So if we take a look at my chart, I'm going to bring up Toll Brothers here. And Toll Brothers had earnings last night after market close. Now, I should have mentioned this at the beginning. This is a special Tuesday rendition of earnings call. We had to delay 1 day, but so Toll Brothers had their earnings last night after market close. The expected move was less than 10%, and you can see here that the stock gapped down about 5.5%. All right, so well within the range that the market makers were predicting for Toll Brothers. Didn't really move at all. Another stock that I put on my sheet this week was Vail Resorts. All right, MTN is the symbol here. They also had earnings yesterday on Monday, December 9th, after market close, and the expected move was less than 10%. And you can see here there was a little volatility today, but the move was only 1.79%. Now, the day's not over yet, but really don't expect much of a move, but definitely is moving less than 10%. Now we get into some of the bigger stocks. All right. So this is AutoZone. Now, AutoZone is a $3,300 stock. That's right. AutoZone is trading at $3,300 a share. But believe it or not, the estimated move there was less than 5% through earnings. They had earnings this morning before market open. And look at this. The stock is up 1.8%, well within the 5% move mark. Option market makers got it right again. Now, occasionally they don't. We're going to talk about that in just a moment. Let me finish up with Costco. Costco has earnings coming out on Thursday. Now, Costco is obviously something that market makers and analysts are going to watch closely because it is retail and a good, along with Amazon and Walmart and some of the other retailer type companies, this is one that is looked at. This is almost $1,000 stock, okay? But the estimated move is only 5% or less. Okay. Really, it's about 4.4%, if I remember correctly. The last earnings result, you can see the stock only moved 1.75% back in September. So the stock just really doesn't, even though it's a $900 stock, actually closer to 1,000, this stock just doesn't really move. All right. So what we do here on these stocks, so Toll Brothers, Vail Resorts, AutoZone, Costco. In fact, we had a trade for our customers on Toll Brothers. Okay. What we do is we sell premium with strategies like butterflies or iron condors, these types of trades where we're selling premium and then just buying out of the money legs to help offset the risk. Toll Brothers was one of those. Okay, and our break evens on Toll Brothers were beyond 10%. We could have tolerated a move of upwards of 10%, but the stock has only moved 5.25% so far today. So we're in very good shape on that. And those are the types of trades that we do in our delta neutral income portfolio. All right. Now, if you like what you're hearing here and you appreciate the value that we bring, please like and subscribe. We do this each and every week. We highlight stocks that we're zeroed in on, that we're putting out to our customers as trades. In most situations, we're doing a lot of them where we send right out to our customers, and we do it each and every week. So let's move forward here. Let's talk about when market makers actually maybe miss or underestimate a stock's potential, and that's when we talk about breakout stocks. All right. So let's take a look at the breakout stocks. This is an example of a breakout stock. This is Shopify, one of my favorite breakout stocks. Okay. Now, this is just an example. It doesn't have earnings right now. This is just to let you know what this looks like. And you can see it's gaps. Okay. These stocks make big moves on a regular basis right through earnings. Shopify is notorious for gapping around earnings. And you can see the last time that it had earnings, this stock just shot higher and then has been then started to consolidate after the big move. So what do we have in store for this week? Well, we do have some big names this week. Let's take a look at the sheet here real quick and talk about it. Now, these types of stocks are featured in our Delta Neutral Breakout portfolio. Okay, this is something where our subscribers subscribe and they're looking for these big moves. First on the sheet was Oracle. You can see Oracle, GameStop, Dave and Buster's, Adobe, Broadcom, Restoration Hardware, Lovesac. These are some of the big names that are on deck for this week. But let's take a look at my chart and let's see how Oracle performed today. All right, so Oracle, it actually missed in its earnings results. It had moved earnings last night after market close. All right. And the expected move was greater than 10%. But right now, the stock, it's a gap down over 8.5% on the open. Stock's only down right at 8% right now. Okay. And has been struggling to maintain this level all morning. All right. And we will see how it kind of finishes out the day. Hasn't quite moved the estimated move amount, but this is a trade that we gave out to our customers and we're slightly profitable in the trade. But we'll keep an eye on it, looking for an extension to the downside now. Okay. Continued downside movement will definitely put profits in our pocket. So we're keeping an eye on that. Let's look at the next stock. We have GameStop. GameStop is a favorite stock for the meme crowd, and people love to watch it. They will have earnings after market close today on Tuesday. The average move is greater than 15%. And this stock does tend to gap around. And you can see back in time here, all this volatility that surrounded the stock. Some of that volatility was through earnings. And I do like this consolidation pattern that we have here. And market makers are anticipating a move of 15% or more. So with that, if you were to do the strategies that we deploy here for our Delta Neutral Breakout customers are straddles and strangles. Okay, so all we are doing is buying a call and a put. Okay, that's it. We're not spreading or anything. So a call and a put at the same strike is a straddle. A call and a put at different strikes is a strangle. We're doing one of those two things. So what you would need to do is price it out and then hope or plan on this stock moving 18% or 20% or 21%. That is where the profits come in. All right. because they're pricing in a move 15%. And if it moves 13%, that trade's not going to be profitable. That's how that works there. Next stop up is Adobe, and Adobe here has earnings on Wednesday after market close. The average move here is greater than 10%, right around 10%. You can see the average move last time was greater than 11. That move last time actually ticked the average move down a little bit, and that's what market makers are pricing in now, is a move of about 10%. Same thing here. So what you would be looking for is on Adobe is a move of $10 or something like that, $8, $10, and you're looking for that bigger kind of move there. All right, let's go to Broadcom coming up next. All right, this has a move right around that 10% number here. I have here that it's coming in less than 10%, but with the volatility of some of these tech stocks here recently, I wouldn't be surprised if Broadcom doesn't move a little bit more than 10%. You can see the stock's down 4% today, and that is moving ahead of earnings, which comes up on Thursday. And so lastly, let's talk about Dave & Buster's here. This is a stock that has earnings coming up after market close today. But interestingly enough, the pricing of the options, this is a potential breakout stock. But guess what? The pricing of the options has us doing something differently. So let's talk about that as we go into this week's trade. But before I get to that, let's talk about our trade from last week. All right. Well, we'll close out. Let's look at our sheet once again and do a little summary here. Some of the stocks I didn't talk about were Restoration Hardware, Lovesac, etc. Ollie's, which has earnings tomorrow night, or actually tonight, Tuesday, after market close. Ollie's is always one that appears up on our sheets. And I did mention pretty much all the others. The only one that I haven't mentioned is probably Macy's. It will move. They have to estimate that will move more than 10% on Wednesday. And again, that's another retailer. So something to keep an eye on there is Macy's. All right. But let's go ahead and go and look at our trade for this week. Last week we did Foot Locker. All right. And Foot Locker is a stock that makes a regular appearances on our list. Okay, it's a stock that we trade often going into earnings, and you can see the stock has been kind of consolidating here, which I do kind of like going into earnings when it just consolidates and it's between my break evens here. I'm looking for that big move, and if we go and take a look at the results, the stock did gap down. But what happened here is the stock opened up at $20.10. That was put us into profit, and the stock traded lower. We sent out our alert just as the stock was starting to rally. We didn't bottom ticket. I think we exited at about $20.30, I believe was the number. So we didn't hit the low. The low of the day was the 1933. We weren't even near that. So I think we exited at 2030. That was a profit of $85, okay, which is a 25% return on risk in just 2 days. Now, what was our risk? Well, our risk was about $300, somewhere right in there. Okay. How do I know that? Well, I'm looking at the risk graph and I can see the bottom of that risk graph on that strangle is right around that $300 mark. Okay. So that would be the debit. And then our $85 divided by our debit, that generates the return. And that is that 25% return that we got last week. So what do we have in store for this week? Well, I mentioned it already, and that is Dave & Buster's. All right. Now, Dave & Buster's, the interesting thing about this is that the pricing was expecting a big move for Dave & Buster's, about 15%. So what that had us do, instead of doing a straddle or strangle that we normally do, we're actually selling premium into this because we could get this really wide. You can see how the break evens encompass almost all the stock movement that it's had since August. All right. So this is kind of a higher probability trade. So what we're doing here is that we're risking about $260 all right, to make 140. All right. So we're risking 260 to make 140. And the why would we do that? Why would we risk more than what we could make? Probabilities. The probability that Dave and Buster's is going to consolidate is greater than the potential breakout. They're pricing in that breakout, but who knows? What if we're wrong? Well, the worst we can do is we'll lose at a maximum, $2.60 per spread that we do. Okay. Otherwise, we have this higher probability trade. This is the type of trade that we do in our delta neutral income portfolio, and we have a very good track record with calling out these stocks that do consolidate through, like we saw earlier with Toll Brothers, just did not move very much. We're in good shape on that with our publication that went out, and to our traders that took that trade today. All right. So we do this each and every week. This is earnings call. We do it typically on Monday. This is a special Tuesday session that we did here today, but we do it every Monday. We talk about the stocks that have earnings during the week. We feature a trade each and every week. We talk about that trade the next week, and then we put out another one just like we did today. So everybody have a great trading week. We have this week and next week, and then we get into the Christmas holiday. So get ready. There's going to be some volatility because next week we do have Fed speak. So just keep that in mind. Everyone have a great trading week, and I'll talk to you again soon. Take care.